Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Megan Grebner. With us is livestock market analyst Scott Brown with the University of Missouri. Good afternoon, Scott.
Good afternoon, Megan.
All right, so we have a lot really to talk about today. Let's get started and recap a little bit about how the livestock markets ended up this week.
Yeah. So when we look this week, I think cash hogs, we were fairly flat for the week. Feeder steers and heifers steady to a couple dollars higher through the week. Fed cattle prices showed a little strength as we went through the week as well. Pork cutout value was down $2.39 for the week, driven in large part by lower pork belly prices. We were off pretty hard Tuesday and Wednesday this week on pork bellies. We recovered about a third of those losses by this morning, so it got a little bit of recovery, but a lot of volatility in pork bellies. Choice beef prices, choice beef cutout up about $4.40, driven really by very strong loin prices relative to where we were at. So all in all, fairly good week for markets again.
Scott, cattle on feed report out this afternoon and really gives us our first look at 2017. Let's talk a little bit about some of the things, how it came out, and some of the interesting points to pull out of that report.
Yeah, so number one, I think we need to really be focused on cattle placed on feed in January. So the report came out up 11.4% relative to a year ago. That may seem like a lot, and it is, but relative to pre-report estimates, we came in pretty much right in the middle of pre-report estimates. We had a 106.8 to a 118.2 to frame the range on cattle placements. It just continues to remind us we have more cattle to deal with, and those are likely numbers are going to continue to hang with us as we move through 2017. We marketed 10.2% more cattle in January than a year ago. Also right in line with pre-report estimates. On feed February 1, up 0.7% relative to a year ago. So all in all, we really came in about where folks would have expected pre-report.
Are there any surprising numbers that came out of that cattle on feed report as you look maybe and dig a little deeper?
Yeah, well, so number one, we got a couple more things out of that report this time. They're starting, USDA is giving us more weight categories. When you look at where we had increases in placements less than 600, 6 to 699, and 7 to 799 are really the weight categories where we saw the most growth in total placements. So we're beginning to get a little more data from USDA in terms of those weight categories. That'll be helpful as we see more and more of that data, I think, to figure out, number one, where those cattle finish at the end of the day, and just the trade-offs between lighter weight cattle and heavier weight cattle being placed. We also got out of this report some information on number of feed yards that we get on an annual basis that show some interesting results, I guess, when you look at what's been happening. Number one, we ended up with 2,000 more feed yards in that less than 1,000 head category. So we continue to see some smaller feed yards that continue to grow in front of us. Those additional 2,000 lots of small producers ended up marketing another 205,000 head of cattle in 2016. When you look at the greater than 50,000 head feed yards, though, they marketed another 710,000 head of cattle in 2016. So I think it continues to remind us that big feed yards still are maybe the more dominant players in the market, but we have seen some smaller yards with some expansion going on.
Are we surprised to see that expansion in some of those smaller feed yards?
Oh, so I think we continue to find an opportunity for those smaller feed yards that probably sit really close to corn to expand, and some folks who will say, I'd much rather put $3 corn through some cattle than sell it in the local market, that I think has increased those small feed yard numbers as we look at 16 relative to 15. So I'm not surprised we see that as that corn remains very cheap relative to a few years ago.
Scott, I'm in Washington, D.C. this week for the USDA's Ag Outlook Forum, and kind of their first projection about what 2017 has in store, or at least for the 2017-18 marketing year. interesting aspect, and not anything I think that's surprising to what we've talked about. Outlook for cattle and hogs is lower. Projections for poultry are flat. But the surprising thing is that we see continued, or they're projecting continued strength in the milk market.
Yeah, so I think when we close with 2017, we'll certainly say we're going to have lower cattle and hog prices. And that's really despite, if you think about what's been happening in those markets, we've seen prices that have risen for the early part of 2017, but we're still well below where we started 2016. And I think that makes it fairly likely that we'll be down for the year. The milk market's very interesting. There's certainly a lot of optimism, I believe, that the slowdown in production expansion in Oceania, New Zealand, Australia, even the EU, who's slowed down substantially in terms of milk production growth, will create opportunities for us to export more dairy products in 2017. However, when you see we got milk production report out just yesterday, and we're up 2.7% in milk production relative to a year ago, we're going to have to think about how that all balances. So perhaps some of the very bullish forecasts that are out there might get trimmed just a little bit as we move ahead. It's really early in the year when we think about where milk prices go, and we're so inelastic on the demand side. It doesn't take much to move us from low prices to high prices. So I don't want to suggest that we have no opportunity for higher prices in 2017, but domestic supplies are going to be very strong relative to our ability to use that milk in manufactured or fluid uses.
I would assume for most of those in the livestock, dairy, and poultry side that it's a little bit of a moving target this early in the year.
Absolutely. Even in dairy, I think you and I continue to have the same discussion. We have more meat and dairy supplies coming to the market, and it all depends on how strong demand is, whether or not we can see higher prices or lower prices for 2017.
And we'll talk a little bit about trade coming up in a few minutes. Let's talk first. Cold storage numbers also came out this week. Any surprises as you look at that report and what that means for our meat and livestock industry?
Yeah, so I don't think we actually got a lot of surprises, but the one that we continue to talk about is pork belly stocks. We all continue to like bacon out there, would seem. So bacon demand has been strong. Pork belly stocks down about 77% relative to a year ago. It's made total pork supplies, or total pork stocks, I should say, down nearly 16%. So for me, this is the little bit of good news that we're getting. Yes, we're putting a lot of supplies of beef and pork on the market, but we're not putting it in freezers right now. And I think we have to recognize that demand has been relatively strong, given we're pushing a lot of additional supplies, even on the beef side. So we were up 0.6% in terms of beef ending stocks. I can live with that when you think about the expansion in beef production that we've been seeing, only being up 0.6% in stock. So cold storage, from my standpoint, continues to be fairly good news for us.
Let's talk a little bit livestock slaughter rates and some of those numbers and what that means for beef and hog producers.
Yeah, when you look at, we did get livestock slaughter out this week as well, and commercial beef production for January up 8.4% relative to a year ago. And let's say that again, 8.4%. That's a pretty healthy increase in commercial beef production. There was one more slaughter day in January 2017 relative to 16, and that's part of what's going on. But commercial pork production was also up 3.4% relative to a year ago. So we're running larger supplies. I guess the good news is when you look at weights, we continue to stay down on weights of both cattle and hogs, helping curb a little bit the growth in production that we've seen.
How significant is the fact that we're seeing lighter weights at slaughter, and what does that mean in the whole supply side of things?
I think it's extremely important. We're running larger numbers on both sides. If you look at steer and heifer weights down about 7 pounds relative to a year ago. If you look at the hog side, we're down 1 pound relative to a year ago. We've been below a year ago for 8 straight months on the pork side. It's both sides of that equation that matters. The number we slaughter and the weight we slaughter them at and we'd have much larger supplies if we continue to run, larger weights. And it's a little interesting. We continue to see these lower weights when we have much cheaper feed that we're pushing through these animals. It just reminds me that, again, I think we're staying fairly current in these markets right now in terms of marketings, and that's all good news.
I don't think we can get a week away without talking a little bit about trade. That's been a big theme here, about finding and making sure that as we see potential for record corn and soybean production again this year and talk of record meat production, that we have a place to put all of these products. I don't want to say we're beating a dead horse, but I mean, how, as we watch these trade talks and these relationships, what are things that producers need to keep in mind about how vital and how key those trade relationships and that global market is right now?
As we continue to say, it's probably as critical as it's ever been. If you look back a couple of years ago and when we weren't growing domestic supplies, we could live with lower trade if that were the case. But when you talk about we're pushing record meat supplies already, the ability to have markets like Mexico and Japan and the potential of China, I think all are important. All the time will remind us, we're about 330 odd million people in this country, and there's a lot more folks outside the U.S. than there is within the United States. And if you think about the growing incomes that we see in many of those places, they're growing faster than they are in the United States. And many of those consumers are looking for more meat protein in the diet. So the growth in demand over the next decade certainly hinges on our ability to export meat.
Scott, anything else this week?
I think we've covered most of it. It's actually nice to continue to see the price strength that we have so far in 2017 when we think about beef and hog prices. It's been nice to be able to see both those moving higher despite record supplies. I always remind producers the time to use risk management is when prices are higher.
All right, Scott, we will see you next week. I'll be on the road again. Next week I'll be in San Antonio, so we will talk to you then.
Great. Take care, Megan.
All right. Thanks, Scott. If you can't get enough of markets, livestock commodity markets, visit Brownfield's YouTube channel to check out John Perkins's Market Minute twice daily. And you can have our weekly livestock market update delivered to your email box every Saturday. Go to brownfieldagnews.com. I'm Megan Grebner on Brownfield.